Hi guys, Rupin here, and in this video we will take a look on how to use MA, or you can say moving averages, while trading. As the name suggests, moving averages are just averages of recent price moves. To understand how to apply moving averages on your trade setup, let's understand some basics first. Moving averages are just averages, they follow price trend. Rising MA indicates strength while declining denotes weakness. Price closing above MA denotes bullishness. Price closing below it denotes bearishness. Still, change is not identified by change in moving average, but by change in price itself. MA is smooth version of trend, and average itself is an area of dynamic support and resistance. So all rules that apply to support and resistance also apply to moving averages. Moving averages should be carefully chosen and they must represent the underlying trend. If they don't represent the underlying trend, then they are useless. Price moving above MA represents confirmed uptrend, whereas price moving below MA represents confirmed downtrend. These are five extremely important characteristics of moving averages. Without understanding them properly, you cannot apply MA to price chart. So if you don't understand them, then please go back and listen them again. Now why MA works? The diagram in front of you represents a ideal price cycle. In this, price first moves up and then goes down. Now this side of price cycle is known as bullish price cycle, and this half of price cycle is known as bearish price cycle. In ideal condition, one bullish price cycle lasts for period of 14, whereas a bearish cycle also lasts for period of 14. Now there are different theories on why 14 is considered as standard, but as per Martin Fring, all theories are baseless. We don't have any idea why the 14-day price cycle usually works in every situation. All we know is that the 14 always works. Therefore, all price trend indicator like RSI, ROCA, we use 14 as our base to find momentum, or you can say the price strength. Now what MA does is that it only helps you in identification of bullish and bearish price cycle. It always enters the trend late and it always leaves the trend late. Now difference between bullish and bearish crossover is usually your profit expectancy. It doesn't mean you enter here and exit here. Nor does it mean by using crossover of 2MA you will get valid buy and sell signals. Valid buy and sell signals on crossovers can only happen when price moves with almost same volatility, which rarely happens. MAs are just trend following indicators, and just like any other trend following indicator, alone MAs are incapable of generating any valid buy or sell signals. They always need help from other indicators or other technical tools or your technical wisdom. But one thing you can always be sure of, that whenever the price crosses a true and carefully chosen moving average, you will get a confirmed bullishness. Now let's move to this chart so that I can show you how it is actually used while trading. So this is 30-minute chart of Nifty. Now the very first condition of using MA is that whatever parameter you select to draw your MA must identify the underlying trend. So what I will do is, first I will look for a clean uptrend and downtrend. So here you have one clean uptrend, so I will draw a trend line here. Uptrend, and the underlying trend is bullish. Here we have a downtrend, so again I will draw a downtrend line. So a clean uptrend and a clean downtrend. Now I will add a moving average, and as per our first condition it should represent the underlying trend, so I will adjust it so that it should represent the underlying trend. Much better. Now as you can see, the moving average is fully capable of showing the underlying trend, and here again you can see that it is fully capable of displaying the underlying trend. So we can delete these trend lines. Now just because the price came above the MA line doesn't mean it's a buy signal. What you have to look for is that once price moves above this line, is there any bullish signal after moving above the moving average line, and you take that signal to take your entry. Now suppose you are a pattern based trader, so what we will do here, we will find a pattern. So what we will do here, if a bullish pattern is formed above the moving average line, we will take entry on that pattern. So here you can see a pattern, converging triangle, or you can say the coil. Now this coil broke above the moving average, so we will take our entry here. After break, now height of this candle will be our risk, and we will take like 1.5 profit on this candle. So here your risk will be 38 and your profit would be 57. Same also applies here. Here again we have a pattern. It broke and price went above the 50-day MA line. So again this is our risk and everything above will be our profit. Now in this kind of situation, this is usually the target for which you should be trading for, the height of pattern, which is 55. So after breaking from this point, you should have expected at least 55 point upside, and this would be your risk. Same can be applied to bearish patterns. Price broke below the 50-day MA line, so here you would have taken a short signal and your profit would be height of this pattern. So again, so after taking short, you could have expected at least 147 point profit. Now it doesn't only apply to patterns but also other types of entries too. So if you want to take a price cycle based entry, I will use MACD here. Now here MACD generated its crossover and here we have our buy signal. Now here you see that the pattern is created and we got a good buy signal here, but here MACD failed to show that. Now understand that not all indicators are capable of showing all buy and sell signals, but whatever signals they generate are fully capable of making you profit. Now here again this signal was generated and here the crossover happened, so you would have taken this signal as buy signal. Again signal was generated here and you would have taken a buy signal here with this much risk. So I hope you understand now how you can use moving averages to actually take entry and exits while trading. So that's it for this video. Thanks for watching. and have a nice day.